Hi guys, welcome back. So, there was some nice rebound today. In the morning, Nasdaq has gapped up above and continued the uptrend. It had an increase of 3% today, growing quite strong. As we saw, the volume got less and less last week. That's why when institutions were holding more due to some panic selling last week from retail investors, then it's easier for them to pull it up. But the problem was the volume was quite small today. So tomorrow, if it gets up and touch this gap, it would more than likely get rejected on this level. I think it might take some time to digest this resistance. So I think it would more than likely go up and down from this point. So that's why last week I said that it might have reached the bottom of the correction. I wouldn't consider the correction to be over yet, unless there is a big candlestick breaking through the resistance or completely gap up above to break all-time high. But I think this possibility would be lower. Right now, we can set a stop loss at the bottom of this line, a little bit lower. If it come back down and break the supports here, I would start to trim off my long-term position. But again, this possibility would be lower than simply going up and down to use some time to consolidate and eventually push through the resistance. S&P 500 is similar, bouncing back without much volume. But it was a nice bounce back. The gap here was still a support. Dow Jones, it's bounced up to the point of resistance as well because it was a bull trap last week as the volume was bigger than the bounce of volume today. So it would more than likely consolidate a bit more first. The good thing is it got bounced back right after touching the bottom of the uptrend. So it did not break this uptrend, but rather just a correction. Now let's look at our stocks. Overall, I think this correction is not a very heavy correction. It's not a crash, but I do think this correction is a beginning of another sector rotation. I think it's quite different than the last correction in January, in a way that it's acting more like a transition from the previous heated sectors to the others. Just like the last correction from September to November, we saw the rise of solar sector and a lot of the EV companies, especially the Chinese EV companies. And until everyone would think that these hot sectors would just keep on growing and flying, this is usually the capital would change the direction and do a heavy sector rotation. And I think capital usually go to unexpected territory, unexpected sector. So at this point, I would personally treat this correction as an opportunity to rethink my strategy of the long and short term position, to rethink my strategy on my portfolio and possibly relocate my investment and shape it into a portfolio that I have more confidence with at this moment. Now let's look at our stocks. Baby NIO grew very well today. During the day, there were some points it grew 10%. Now that's a lot. I think it was pricing in the earning. Now we saw the earning after market. It was really not bad. Revenue grew 133% year over year, 46% compared to the last quarter. Loss was reduced by 48% year over year, but had increased compared to the last quarter by 25%. So that would be a little bit drawback. But the whole year of 2020 still had increase of 107% year over year. So overall, it's good, it's not bad. But I said last week, NIO's earning was expected to be good anyways. So unless they have some surprises, the market had already priced in a good earning, especially after a big jump up today. So that's why after it released the earning report, it had dropped at most 6% after market, and now it has reduced to 3.9%. So some buy the rumor, sell the news action, because the big run up today already priced in the high expectation of the good earning. So I think this drop is not necessarily because the earnings is not good, but more for two reasons. One is the correction after a big run up today. That's mainly pricing in the good earning. And two, as I said about the sector rotation, I think right now the EV sector is under a lot of pressure, especially when Tesla is not even doing so well. Now, it doesn't necessarily mean that it would start to break the support and go down further. It could be just going sideways and consolidate for the sector to gain more momentum. Okay, now next, EH. Now EH looks like it has bottom already. It was basically dropping without volume last week during the whole correction, and right now it's consolidating at the bottom of this uptrend. So right now it looks safe to buy the dip, but just don't expect it to have a V-shaped recovery right away, but rather give it more time to consolidate. It might slowly grow over time. LKCO is the same thing. Nothing has changed since my video yesterday. It's still going sideways, dropping without volume, waiting for the dust to settle. And then ZEPP, our previous Huami. As you know, I'm super bullish on Huami, but right now it's still trying to digest this drop. It's not too much to digest, but just a long candlestick. That's all. So we need to expect it to go sideways, up and down, and consolidate. I will give it some time, and you can see that during the whole correction in the last 2 weeks, Huami was basically going sideways, not dropping much because it just recently broke the all-time high, and then with the market correction just come back down to backtest and consolidate before to gain more momentum, I believe. So it really didn't drop much overall in this correction, and it's not under the pressure of the sector like the EV. So right now I'm quite comfortable with investing in ZEPP, so I'll just give it some time right now. Now if it can stay in this zone to consolidate more for 1 or 2 weeks, I would double down my position and go quite heavy on ZEPP. That's my plan, okay? WIMI grew almost 18% today, simply dropped too much last week. So right now it has the support of this gap and the resistance of this gap. Might need to take some time to consolidate before. Now I haven't updated GoCo for a while, but during the whole correction it really didn't drop much, and it was still staying above the support, going sideways, still making higher lows. So I think GoCo right now is also safe to hold. Similar with Well Health, another health company that we invested in. Now this is Well Health for TSX, ticker symbol WELL, but for American, ticker symbol WLYYF. During the whole correction, it continued making higher lows. It did not break the support, but rather it just went sideways for the correction. Same thing with ZEPP and GoCo. I think, well, it's also safe to hold right now. And if you did not get it with us a few weeks ago, right now it might be a safe choice during this correction with a lot of uncertainties in the whole market. Mesa is still growing strong. It has doubled since we bought in a month ago. The trend is continuing, but just prepare for it to wash, sell, or consolidate anytime, okay? Now I'm still holding the shares. Something that's worth mentioning is this company called VIOT Technology, ticker symbol VIOT. I shared this in the Discord group last week. I said I opened a position in this company. It is in the Xiaomi supply chain, supplying for the Internet of Things, obviously for Xiaomi's smart home system. But I think it can do more than that. So as I was shaping out my strategy on the portfolio, I would be more and more focused on the whole ecosystem of smart city, smart logistics, smart traffic, and smart transportation that I have mentioned over and over again on my channel. And right now I'm adding VIOT as my investment on the IoT, the Internet of Things. Last week it dropped to a support around 10, and it would be great if it could come down between 7 to 9, and if so, I would load up the boat on this. I think this company is still under the shadow, and it's in a quite important sector, and yet not many people know about it, and I have been watching it for some time now. But it doesn't mean you have to buy right away, because it did grow. So something you can watch out for and look for every dip, okay? So I just wanted to give you an update on the market and our stocks, and also giving you a heads up. I would be treating this market correction as an opportunity to shape out my portfolio according to the sectors and where I think the capital would go next after the correction, and I do think it would be unexpected. So we'll see. And now you know what I'm planning on my move next. And if you have enjoyed this video, please give me a big like and write me a great comment, and I will see you tomorrow. That's it, guys. Hope you can find my videos helpful. Make sure you subscribe to my channel and give me a big like. Thank you.